Okay, so we're going to talk about transparency, which, by the way, should start with.
The camera is not showing you, so it's better you use speaker and you can send there.
Okay. No. Hello, hello. Is that okay now? C'est bon? Okay. So we're going to talk about transparency, and I think we better start with a few things that happened in the last few days. In particular, the story about Kim Kardashian. As you know, she was fined by the SEC for promoting a product without disclosing that she had received the $250,000 payment to promote those products. And so the message here is the regulator wants transparency, and he wants people to say what they're doing and why they're doing it. Okay, so the one transparency about Kim Kardashian is transparency in advice. It's not a transparency in transaction. We're going to talk about transparency in transaction in a second, which is slightly different, but at least as important. Doesn't show like it should. People keep saying that institutionalization is coming, and yet the question remains, what are the big guys doing in terms of institutionalization? Okay, the small guy, we know there are a lot of retails, there are a lot of institutions that are specific to cryptos, but what are the big guys doing? Well, this is an abstract of a blog of a magazine called thetrade.com, and it's an abstract from this summer. So it's happening, a lot of things are happening, and a lot of things are happening fast. Schroders, BlackRock, CME, Broadridge, Nasdaq, those are old-fashioned players. Those are old-fashioned TradFi. Those are old-fashioned providers of infrastructure and software in the space of traditional finance. So those are the ones that we should be looking for when we are talking about institutionalization. And that's exactly what's happening. Now, it takes a form which is a particular form. So those guys don't come in the market and trade, okay? Because they're not ready, and some of them are not even allowed to do that because of regulation. So what happens is they're trying to find ways that are particular ways to enter the market, and so you don't see it necessarily, but Schroders acquires a minority in a blockchain firm. A CME Group launches a product on Ether Future. BlackRock partners with Coinbase to propose crypto on their Aladdin platform, and Nasdaq is offering its trading platform software to some partners to trade crypto. So the way institutionalization is happening today in the old world is people are approaching crypto and they're trying to find partners, and they're trying to find ways to get their hands across the product, or trying to understand, but they're not trading yet. So when you hear about institutionalization and of trading, when you hear about volume from institutions, those are not those institutions that trade. Those are the small hedge funds, family offices, and so on. So those are really very small firms as of yet. The big CalPERS, pension fund, and all those guys, the big asset managers, have not yet really begun trading, which means that the best is yet to come. Now, why am I showing that? Because the best is yet to come, provided that the industry can supply the proper standard across many different elements, but in particular across transparency and compliance. And that's what we're going to talk about. This is a digital asset survey, one more digital asset survey from State Street. Again, it's very important to note that this is State Street talking. I'm not quoting any crypto participants. I'm not quoting any small firm. I'm talking about State Street, which is one of the biggest financial institutions in the world. Those guys took the time to study their customers, and that's really what they spend a lot of time doing in general, but in particular about crypto. And so the question they ask should be taken for a clear information about the state of the market from big institutions. And what are those guys saying? Those guys are saying, look, what are your concerns about cryptocurrency? And you obviously find the usual suspects, cybersecurity, and it's a no-brainer. And then you find a few different things that are quite interesting. The second one is transparency. Now, why should State Street clients, institutional clients, care about transparency? Well, because they have to. Because in the world of traditional finance, you have to care about transparency so that you can fulfill your regulatory obligation, and because your clients ask you how you're executing and how well you are doing. So that appears, surprisingly, that appears on the second in the list. And then a few more items I will highlight for you. Liquidity, regulatory treatment, again, no-brainer. Liquidity, very interesting that people are questioning liquidity of the crypto, although liquidity space, the crypto space itself, it's presenting apparently a very high liquidity. People are saying Bitcoin is more liquid. It's one of the most liquid instruments in the world, which is probably not true if you take into account fake volumes. And that's a concern. Liquidity in general is a concern. Volatility, it is a concern, but somehow lower in the list. 24/7 trading. Now, why should people care about 24/7 trading? Well, because they're not equipped to deal with it today. If you're a financial institution like State Street, your entire business is predicated on the fact that the market closes once a day, that you have an auction and you have liquidity concentration throughout the day at opening and closing and so on. So 24/7 is a very different way of doing business, and those guys are not used to it. And then carbon footprint, market manipulation, and so on. Market manipulation, by the way, is also a transparency subject, as we're going to talk about in a second. So it's a real subject, transparency. It's very high on the list of institutions, and it's very high on the list of people who are looking at crypto and are yet to come in the space and trade. So I said Kim Kardashian was fined for transparency, which has to do with advice. I'm advising a product, and I should disclose that I've been paid to do that. So my advice is paid advice, and it doesn't have the same value as if I'm a professional and expert and I'm not getting anything to advise you on something. This is the different kind of transparency we are talking about. This is a transaction transparency. So this is the idea that whenever somebody buys or sells tokens for significant size or for as an expert, as a professional, and so on, those guys are expecting to see some level of information from the market. Now, it's commonly divided in two, what is called pre-trade and post-trade. The definition comes from the International Capital Market Association. Again, it's a trade body which is very influential, and it's been around for quite some time. So this is nothing new. The fact that ICMA would define transparency on its website only means that it's been a subject for a long time, and it's been 20, 30 years in the minds of regulator and participants and so on, to the point where it's been studied extensively in the academic world. So pre-trade transparency relates to the information you have when you're about to make a transaction. In particular, what kind of price can you get? What kind of liquidity fraction, liquidity partitioning, where you should you trade, what price can you expect, how you should partition your trades and so on. And it's especially relevant in crypto, where you can trade on 20 different venues, 20 different brokers, if not 50, and then you have DeFi on top of that. So liquidity is extremely compartmented. The venues don't talk to each other. You cannot trade, send an order, and have it split across different venues automatically. You have to have somebody to do that for you. So there are a lot of questions about pre-trade prices. Okay? Why is it important? Because if you want to buy 1 Bitcoin or 50 Bitcoin or 100 Bitcoin or 1,000, the size being different, it's important that you have a sense of what price you're going to get. Okay? Because that goes back into your trading algorithm or into your investment strategy, and it has to do with capital allocation. And that, by the way, is one of the primary objectives of capital markets. It's an efficient and fair capital allocation. So you have to have a sense of what price you're going to get. And then at the end, when you have a price in mind for a pre-trade, and then you're going to look at your execution, the transactions that you've actually received from your broker or from your intermediary, of course, you are going to want to compare those to the prices you were given before. So that's pre-trade transparency and post-trade transparency. Post-trade is you've received an execution, people have taken your order, they've taken responsibility for your order if you're dealing with a broker, and those guys give you a price, your average price on your transaction, and you obviously want to know whether that's the good price, and even more, if it's the best price that you could have received, considering the particular circumstances in which you were giving the order. Okay? So if you're trading at night, if you're trading across different venues, or if you're trading significant size, or if you're trading small size, but in many clips, you will want to ask your intermediary some sort of accountability as to the post-trade transaction you receive. Okay. Now, why is it important? Why is accountability important in capital market? It is in traditional space. It is for traditional assets, and the same cause having the same effect. It's obviously important in the crypto space. Well, for a couple of reasons. Here are a few reasons. Number one is distrust. Okay, now we operate, the capital markets operate under the assumption that intermediaries fulfill their own interest and have their own utility function and so on, but it's also predicated on a lot of trust. The regulators have, over the years, trying to formalize that trust and try to formalize the different relationship between the intermediaries so that trust would not be a subjective, but it be an objective element of the markets. But at the end of the day, you need trust. Okay, and in particular case of crypto, it is the first thing I mentioned because a lack of trust is really one of the big obstacle today for people to adopt crypto, whether they are individuals or institutions. Okay, so you have distrust, but it's difficult to measure distrust. So how does the opacity generate measurable components that are adverse to end investors? Well, lower liquidity is one. When you don't have full transparency or you don't have enough transparency, you don't have any indication about liquidity. And that, by the way, is a very clear factor in the liquidity of the crypto. We really don't know. Nobody knows how liquid those things are, despite what people say, despite what the exchanges tell us, despite the research that people are putting out. Until we have a lot more liquidity, it will not be possible to know exactly how liquid the things are. You have fake volumes, you have market manipulation, you have people who stuff the order books and don't want to trade. You have all sorts of things that have been going on in traditional finance for like 20 years and are now happening in crypto. And they are, again, nothing new. So we know exactly where to look. The problem is to look, you have to look and measure, you have to have data. And today it's very difficult to get reliable data. Lower liquidity, and that leads to higher transaction cost, okay? And I'm going to show you in the next slide exactly what I mean by that. We believe, and that's, by the way, what we do at Sun Tzu. At Sun Tzu, we produce research, we produce liquidity research and transparency research, and we're trying to make crypto a more trusted environment by providing some transparency based on data. But it means we believe, and we believe because we have the experience in the traditional world, institutional investors will not settle for less. They are used to transparency in their day-to-day operations in traditional finance. The regulators expect that. So institutional investors cannot operate without a minimum and a satisfactory level of transparency, without a certain standard. And of course, regulators will not accept anything less. Now, Kim Kardashian is a very good example, but it's by far not the only one. And when you look at advice transparency, or when you look at transaction transparency, you have also all other sorts of transparency compartments, such as KYC, anti-money laundering, and so on. So you have plenty of sources of opacity that the regulators have tried for like 30 or 40 years to eliminate, or at least mitigate in the capital market. It will obviously do the same in crypto. And if it cannot succeed, if regulators cannot get that level of transparency up, they will not promote mass adoption. They will not allow mass adoption. Okay, so we believe everybody has a vested interest to get there, to get to a higher standard of transparency. Now, in practice, what does it mean? And if we could put some figures on it. So I took, and it's really a ballpark figure, 100 billion trading average per day on all cryptos. That figure is coming from CoinMarketCap or CoinGecko. It's aggregated, it's really approximative, and it really doesn't matter whether it's 90, 120, whatever it is, it's very, very significant. By the way, include stable coins in there because they're part of the system. Transparency on the stablecoin pricing is as important as transparency on other types of coins. So it doesn't matter whether it's stable or not stable, you need transparency in the order book, in the transaction, in the price formation process. Okay? The direct cost, that is a commission investors are paying on those, roughly 25 to 40 billion. So how did I get that figure? Well, you take 100 billion per day, you multiply by 265 days a year. You apply 5 or 10 basis points, and you get ballpark of 25, 30, 40 billion. And again, the absolute number doesn't really matter. What matters, it is very high. This is the amount of revenues accruing to trading venues yearly. So you bet that you have many challengers, you bet that you have a lot of competition in the execution space. It's a big pool of money. It's crypto execution became overnight a multi-billion-dollar business for people who are interested in it, and it's unregulated, so anybody can come in. And so you have a lot of people coming in. So you have a lot of new exchanges, you have a lot of trading venues, you have, I don't know, 100, 150 trading venues, you have a lot of brokers. Anybody can open an exchange, can open a brokerage firm, can open an execution venue, can open on DeFi also. I haven't included DeFi, by the way, in those. The DeFi numbers are still so too small to make a difference, but they will grow, so they will become part of it. So it's very tempting. The commission level is very tempting, but it's already under pressure. Now Coinbase has announced zero-fee trading. Again, if you look at the world of traditional finance, you have example of that. eToro was the first one to propose, I believe maybe it was Robinhood, but anyway, those guys are proposing zero commission trades. The big firms, Schwab and so on, have also proposed zero commission trades under certain circumstances. So it's coming. So that revenue stream is very big, but it's under pressure. In the world of traditional finance, we know that the amount of indirect cost to investors is of the same order of magnitude than the direct costs. We know that, but it's been studied extensively because of a legal corpus called best execution that's included in MiFID and MiFID II in Europe. So there's been a lot of research in Europe and the US about indirect cost, impact, slippage, and so on. To give you a sense of figures, if you're an institutional money manager in TradFi and you're executing significant volumes, you're paying anywhere between 1 and 3 basis points on your commission. Okay, even sub 1 basis point in some cases if you're a startup fund, and 3 or 5 basis points is actually very, very high. So the level of commission in the traditional finance is even lower than that. And the impact and the slippage costs that you can see are roughly of the same order of magnitude. So if you apply the same reasoning to crypto, and there's no reason not to do that, as a matter of fact, if anything, impact and slippage should be considered higher in cryptos than in traditional finance, you get a 20 billion a year impact and slippage cost, which is absolutely not accounted for by anybody. So if you save 1 basis point or a couple of basis points on your execution, that would immediately affect investors by several billion. So that's what I'm talking about in transparency. And what I'm saying is just by executing better, and I'm not saying that you should buy or sell at different timings. I'm saying just by executing when you've made your decision, you're going to save a significant amount of money every day, which, by the way, is a very, very serious topic in traditional finance. So it will become a very, very serious topic in crypto as well, because it's big money. And especially for exchanges, we believe at Sun Tzu that the trend towards zero commission trading is going to expand. And if you're an exchange or if you're a venue and you're not getting any commission, how are you going to get customers and clients and traders? By providing liquidity. And you have to provide some sort of measure about those hidden costs. And with a little bit of luck, your impact and slippage costs are better than that of your competitor, and so people will come trade with you. And the more people you get, the more depth you get, and the more impact, the less impact and slippage you get, and so it becomes a virtuous circle. So we expect concentration in the trading venue space. We expect that there will be a lot of them that will fail because they will not attract customers and they will not survive. And one of the things that will drive who succeeds is the level of transparency those guys provide. So transparency, trust, adoption. We believe that there are 2 elements to transparency. One, which is exogenous, it doesn't depend on us, and there's nothing we can do about it. It's regulation. It's going to come, and if the industry doesn't adapt or doesn't accept, it's going to come hard, like it did in the traditional finance space, and it did cost a lot of money. And the data, and that's where Sun Tzu comes in. We love the data, and we do as much as we can to get clean and proper data. What about regulation? I mean, you've probably followed that. It's looking more and more like traditional finance. The regulators have spent 10, 15, 20 years looking at the traditional space. They've decided that transactions will happen a certain way. They've decided that governance will happen a certain way. It's going to be very difficult for them to accept a very different operating model. So you should expect some convergence. Of course, those assets are not, digital assets are not the same as regular assets, but there will be some form of convergence, and you can see that all over the place, especially when retail investors are involved, because those are the ones that the regulator wants to protect. So what about data? The other element we consider to be extremely, extremely important in the crypto space. Well, this is a transaction value chain, okay? So you have a buyer, you have a seller, and you have intermediaries in between. Now, it's obviously a very schematic and a very approximative picture, but in order, you have liquidity providers, brokers, you have centralized, decentralized venues. On the other side, you have the same thing, and then that's how brokers and that's how buyers and sellers meet, and that's how the way the price is formed throughout those intermediaries. Transparency means that you're going to look at every single intermediary, their relationships, and how they interact, so that the investor gets the best price in the end, and intermediaries get the fair commission for the service they provide, which may be liquidity or not, which may be inventory warehousing in some cases, some form of risk or not. Question: if you're a buyer or if you're at the end of that chain, how do I find the best price? I'm transacting several hundred Bitcoins or 700 tokens every day. How do I find the best price? Which liquidity provider should I go to? Which broker should I go to? How am I going to be able to benchmark my liquidity provider? How do I know that this particular guy is better than this one under these particular circumstances? And it may be for a particular token, it may be for a day of week, it may be when in a particular region. It may be that this guy is better because he has retail investors, and this one is less interesting for me because he has institutional investors. How do I measure, how do I account, how do I track, monitor with time? Because those things change. Somebody who has a very good liquidity today may not have the same tomorrow. Those are all sorts of questions that you are entitled to ask if you're an investor. Those are all sorts of questions that will, at the end of the day, give you a better price. Better price means you're saving costs, and if you're managing money, your performance is better. So for the same trading strategy, for the same idea, you're going to save money and your performance will be increased, and it may be significantly increased if you ask those questions properly and if you're equipped with the tools to answer them. But now it also applies to the intermediaries in between. How do I market my service? I said, and we believe at Sun Tzu that the world of zero commission trading is coming to crypto, and it's actually coming very fast. It's a race to zero. And so if you're a venue, if you're a broker, how do you compete? How do you salvage your revenues when you don't have the luxury of raising commissions? Well, there is only one thing you can do. You can provide liquidity, you can provide the best execution service possible, but you have to be able to do that. You have to know what you're talking about. You have to measure liquidity, you have to compare, you have to accept the idea that if you don't know what's going on, you're not going to be able to convince sophisticated investors to stay with you. And by the way, if you provide liquidity and you can document that you provide liquidity, commission is not an issue anymore, because an investor will pay for the service and liquidity. So you regain, if you look at your liquidity, if you look at your transparency, and if you do a good job of measuring and benchmarking yourself, you restore your pricing power on commission. And so those are questions that we deal with at Sun Tzu. That's what we do all day long. We collect the data and we extract from the data information about those questions. And obviously the third and final element is the regulator. The regulator care about those things because it's the efficiency, the fabric of the market which is involved. How do I enforce the efficient market? Because that's my job as a regulator. How do I protect investor? How do I make sure that the value that investors pay for a service is a fair one? How do I ensure that the market is competitive as far as execution is concerned? And so on and so forth. You have all sorts of issues, market fragmentation and so on. Now, you may be wondering, why is it that I'm hearing this now, and why have I not heard that on different conferences and so on? Well, the thing is, with my 0.01 basis point percent of savings, I'm not getting you excited. Okay, when you go into Bitcoin and you make 20% a day, we are not getting anybody excited about a couple of basis points here and there. But that's today. Tomorrow, if institutionalization happens, a few things will happen. Number one, volumes will go. Number two, volatility will go down. And number three, the market will structure itself like it is structured in traditional finance. So you will care about that basis point at some point. There is absolutely no doubt about it. Even if you have high volatility, that volatility will go down, and you will have to care about that basis points. So we believe we're getting prepared for that, and we believe it's coming, and it's coming soon, especially, again, in a world where commission are being wiped away. And that's what we do. So we have a bunch of products. Some of them have launched. Some of them will launch next year. We have a bunch of products that allow someone to look at that relationship a little bit more closely. The relationship between an end investor and liquidity provider and broker, that's what we call client-centric product. So if you execute with someone or if you have a bunch of brokers, then come to us and ask us, how am I going to get the better prices? And we will help you get better prices. And then we have other products which we call market-wide transparency solutions. Those are the ones we'll launch next year, where we propose liquidity-driven prices. Okay, what is the market price of Bitcoin today? What is the market price of an illiquid token? Well, we have ideas and solutions about that, and so we'll propose liquidity-adjusted prices, because that's what you need as an investor to make a decision on your capital allocation. And today, we don't find that the solutions that are provided by the industry are satisfactory when you look at them from an institutional standpoint with an institutional standard. And I believe I'm done. Thank you.
Thank you, Stéphane. Thank you, Stéphane, for kicking us off at the blog stage. If anybody has any questions, we're very free to answer any of your questions, but maybe not. We may move forward to our next presentation on the blog stage. By the way, my name is Hayate from Cointelegraph Japan. Thank you very much for joining us. Today, we're going to have a lot of talks regarding the metaverse. And next coming up is Ashan from the Cloud City Metaverse. He is going to talk about the nations and what is going to happen in the TCCM universe that's going to come up. So without further ado, please come up, Ashan. Great, thank you.
Thank you.
I don't have a presentation. Okay.
Okay. So that was a teaser trailer. I hope you guys kind of liked it. So my name is Ehsan Imtiaz, and I am the CEO and founder of the Cloud City Metaverse. We are a game-first MMORPG platform with Metaverse as a core vertical. So we are kind of building it like Ready Player One, where we are going to have a hub where people are going to be able to make social interactions. They are going to be able to build their own businesses, make business transactions and whatnot. And then we are going to have a very vast open world map where people are going to be able to play games, complete quests, and earn NFTs, and obviously still have a chance to earn Astral. I know play to earn is not the talk of the town anymore, but still, there are going to be opportunities for them to, to be able to earn. And then we are basically, we have a stall which is, I think, K33 in Zabil Hall 4. And we are demonstrating our pre-alpha build, so if anybody is interested to try out where we are at, we would love to show it to them. But anyway, right now I'm here to talk about what our role is in developing or in laying the Web3 foundations in developing nations. So I am from Pakistan myself, and as many of you might have heard of the recent floodings in Pakistan, and obviously some other political situations that keep Pakistan in the news. But yeah, Pakistan is a developing nation itself. Believe it or not, Pakistan is, you might be surprised to hear this, but Pakistan is the 4th largest English-speaking nation in the world. And, according to Pakistan Telecommunication Authority, which is the official, telecom and authority in Pakistan, regulatory authority. Pakistan has around 88%. So first of all, the population of Pakistan is more than 220 million, which is a lot. So out of the 220 million, 88% of Pakistanis are subscribed to some kind of cellular service, and 54% out of the 220 million are subscribed to 3G or 4G services. So that is a huge market that is untapped. And let me tell you that 54% roughly translates to 125 million or something. So 120 million people that are addicted to watching TikToks, that are addicted to watching videos on YouTube, that are addicted to Web 2 social media platforms, basically. That is all that they do. And now what is it that we are doing to translate or help them transition from just Web 2 into Web 3? That is what I'm going to tell you guys about. So first of all, we are targeting our core audience is the South Asian market. We are building the metaverse. We call ourselves the Pakistan's first metaverse, and we are heavily marketing in Pakistan as well. We want to give people of Pakistan opportunities to be able to not just play these fun and engaging games, but also build businesses, build their brands within the metaverse to reach out to a wider international audience, as well as have the chance to earn whatever they can from our platform. And we are a game dev studio. Narsen Studio is the name of the game dev studio. And we've been in the business for the last 7 years. We've been building games for, we've built games for a lot of big brands, Fortune 500 companies as well. So we have all the expertise to build something like this. And so one of our core mission is to educate people about Web3, and that is why we've worked with a lot of universities back in Pakistan. We offer a lot of Web3 cohorts. We offer a lot of workshops in Web3. We work with universities and host Solidity cohorts. We host Unreal Engine cohorts. We also host Unity cohorts to help and educate the up-and-coming generation of the latest and trending technology. And then we also talk a lot about Web3. What are the what different streams you could get into in the Web3, and it's not just about cryptocurrency. I believe a lot of people, there's a lot of FOMO around cryptocurrency, or there was a lot of FOMO around cryptocurrency. And back in Pakistan, when you talk about blockchain, the first thing the other person who is not very educated about Web3 would say, yeah, Bitcoin or Ethereum, something like that. And then we have to educate them that look, it's not just about cryptocurrencies. You can build a lot of DeFi applications or GameFi applications on the blockchain layer, and there's a lot of it's an evolving space. We're still very early, and there's a lot more that you can do. So I recently also hosted a space on Twitter. We are also all about empowering women in Web3, and the space was us talking about problems in the Web3 space or the tech space in general, how we can introduce more women in, how it can be more inclusive to women, the space. So now this was just Pakistan, us doing some work in the Pakistani region, but we are also registered here in the UAE, and we're also registered in the United States. So we are also using all our resources in these regions to try and voice how we can help these developing nations to for them to get onboarded into the Web3 space, how it is that we can help them to transition from Web 2 into Web 3, and yeah, all of that. So about the platform, we are basically trying to build kind of a Steam for Web 3, where we're going to have different games. Initially, we are going to do several games of our own. This is the MMORPG aspect of the metaverse, where people will be able to make social interactions and whatnot. And then the racing game is one of the games, the arcade games that we're doing. And then the idea is that we're going to build different games from different genres. and then later on become a platform for other game developers and other, Web3 projects, for them to be able to come into our ecosystem, come into our platform, and utilize our user base and whatnot. So yeah, that is a little bit about us and what it is that we're trying to do. And if anybody has any questions, I would love to, answer them. And I would also love to host anybody who wants to come and try our project or build. It's very fun, it's very engaging. And the best thing about the project is that all of our games are going to be competitive skill-based. So it's not just like a running game where you're just running and, avoiding hurdles and obstacles, and and you're basically trying to earn games. It's going to be competitive. All the games are going to be skill-based, and yeah, it's going to be really fun and really engaging. So this is the first game. It's called the Cloud Grand Prix. There are going to be multiple maps that we will have. This is the first map. This is, all built in-house as well. But yeah, talking about how developing nations can, use us as an example, because we are based out of Pakistan ourselves. Our dev shop is in Pakistan. We are more than 100 people team. Around 40 people are working on the project. That is why we are able to build something of this quality. So yeah, people can take example of how if you really have the grit and really have the potential to or the vision to build something and stick to it, you can really do it. So I've been invited to a lot of talks. I basically also am a resident of Dubai, so I fly back and forth from Dubai to Pakistan and vice versa. So I speak a lot at these panels, and I am always talking about how we are still very early, and how these developing nations have always been at the back foot of technology, how North America and the European world has always taken advantage. So now is the right time for these developing nations to step up, to take the limelight and build projects like these, and be the next unicorn of the space. So I'm always available if anybody needs some guidance, needs to talk about anything related to Web3. I've MJ here, who is my co-CEO, who is also very familiar with the space. And yeah, we're always around. We're always available if anybody needs to ask any questions. We're always around. So that's it from me. If anybody has questions, I would love to answer them.
Hi, I would like to ask something. First of all, it's very nice to have someone from Pakistan here. And second thing I want to ask is that which blockchain these gamings are based on? And secondly, can I earn something while playing these games?
Yeah, so thank you. Right now, the vision is to be blockchain agnostic, obviously. We want to be able to host as many players from all different, tech backgrounds and backgrounds in general, people who are on different chains and whatnot. But right now, we are focusing on EVM compatible chains. In-house, we have a sandbox environment where we are, running some tests on Avalanche, on Polygon, on BSC as well. And we are very closely looking into the ETH to merge as well, how that plays out. Because if sharding is introduced, gas fees is going to go down phenomenally. So right now, since we're not launched yet, we are running a sandbox environment in-house and looking at what the best possible chain for us would be to at least launch with. And then obviously the idea is to go, or the goal is to go blockchain agnostic. And what was your second question? Yeah. So initially it was a play-to-earn model, but after what XZ went through, we had to go back to the drawing board and figure out what it is that we could do. And we were a dual token model as well, but now we are shifting towards a single token. Since we haven't launched yet, so we had that leverage to redesign our economy. So yes, we are not going to be heavily play-to-earn. We are going to be a fun-to-play game with opportunities for people to be able to earn rare NFT drops, and obviously earn our token, which is called Astral. But it's not going to be like you play a game and you're going to earn this amount of token. That's not how it's going to work. You have to grind, you have to play the game, you have to have fun, and then obviously, yes, there are possibilities to earn within the games. Yeah.
I have a question.
Sure, man.
So, are all your games? You said you develop games, yeah?
Yeah.
Are all of them in Metaverse, or do you have like some like normal games also?
Yeah, yeah. So, like I said, we've been in the business for the last 7 years. We're actually one of the biggest Unreal Engine studios back in Pakistan. We have a team of around 100, 110 people. So we have been a client-centric, game dev shop. We've always built games. We've actually worked with all the major sports leagues in the USA. In our portfolio, we have built games for NBA, NFL, NHL, even MLS. And we have worked for Fortune 500 companies like Coke, Chevrolet, Pepsi, Dunkin' Donuts, to name a few. So we've always built games for people, and these are games that they own. They own the IP, and and there are other clients as well. We have some games that we've built for our clients that are on Steam as well. The very popular game launcher and a game engine. But yeah, for this particular project, the Cloud City Metaverse, we're building our own games. So like the Cloud Grand Prix, that is our own IP. We're building the first game. Then the idea is to build, games from different genres, so that different players that have different tastes in different games can enjoy all these games within the same ecosystem. I'll let you guys watch the amazing visuals for another 5 minutes, and then I guess I can wrap up. And yeah, again, if anybody wants to try or build, I'll definitely, love to welcome you at our booth. It's right around the entrance of the Hall 6. It's K33 in Zabil Hall 4. And I would love to host anyone who wants to try or build where we are at right now. And I would also love if anybody would, like to join our Discord, our official channels. And we have a lot more videos on our YouTube channel as well. If anybody's interested, they can watch these videos out there as well.
There you go. Hey. All right, thank you. That was Aman from the Cloud City Metaverse. So we are here for the block stage, and right now our stage is mainly focused on the Metaverse. And we're lucky here today because we have some people from a Japanese project. They have a booth there as well. And they have a game that is based on has a history of 14 years. And they are transitioning it into a Metaverse. It's called Genso. And I'd like to bring on the CEO, Maxi, over there from the stage. But maybe later. So we will play a video and show you what they are building right now. They are becoming Japan's #1 metaverse. And they have been bringing in a lot of Japanese IPs where, for example, Hello Kitty. For example, some very famous animes in Japan. And they are putting together all these Japanese IPs into one metaverse called the Genso Metaverse. And we'll wait for the video to come on. Yeah. Well, there's sound as well. Anyways, right, so the game, the Metaverse, is a game that was most downloaded in 2012. It was a game that has accumulated about 8 million downloads in Japan and has a very robust user base. I think the most interesting thing is that not a lot of people in the West know about what's going on in Asia, in Japan, China, and Korea, what the popular games are there. And that's why we're bringing in these games from Japan so that people can see. But I'll check what's the problem with the video over there.